Well, a very good evening and thank you for joining us on India Business Hour. I'm Ashmit Kumar and here are the headlines that we're tracking this evening. Market regulator SEBI decides to phase out share buyback from the open market in a gradual manner. Until then, a separate window will be created on the stock exchanges to conduct buybacks. SEBI chairperson says it will create a level playing field for all investors. Asian markets go into a tailspin after the Bank of Japan throws a curveball, allows the yield on its 10-year bond to move 50 basis points on either side of its 0% target against the earlier 25 basis points. Says the adjustment will improve market functioning and help it to maintain accommodative financial conditions. After weeks of negotiations, EU nations agree on a natural gas price cap to tame the energy crisis. Member nations decide to trigger a cap if prices exceed €180 per megawatt hour for 3 days. The cap will be effective from the 15th of February next year. RBI's monthly publication on the state of the economy highlights that reduced input cost pressures and buoyant corporate sales can herald the upturn of the capex cycle in India, but warns that there should be no letdown of guard against inflation. Also gives a thumbs up to the digital economy, which it says grew over twice as fast as the Indian economy. The government may look at sweetening the pot for potential buyers of IDBI Bank. Sources say it may prompt the tax department to consider the stock's fair market value at the final bid accepted price. Move will prevent any additional tax burden on the final buyers if the stock price appreciates. The government informs Parliament that there have been complaints against 12 electric vehicle manufacturers for allegedly violating FAME subsidy norms. Says 2 of these firms have been suspended already. Adds that processing of pending claims by these firms has been stopped till they submit evidence of their compliance.
I do hope that the worst is behind us in terms of inflation. And one is seeing that in some parts there is a bit of a softening.
Nestle India boss Suresh Narayanan says he hopes the worst of inflation is behind us, but adds it would be difficult to forecast the easier 2023 just yet. Adds that he does not see the D2C segment as a large revenue generator. Expresses confidence on Nestle's repertoire of brands. North India continues to grapple with dense fog. Low visibility conditions impact road, rail and air traffic movement. The Met Department says the situation in Punjab, Uttar Pradesh and Haryana should improve starting tomorrow. COVID cases surge in China with reports of hospitals being overwhelmed. Wall Street Journal's China bureau chief tells CNBC-TV18 that there are more COVID infections across China and that the government has stopped reporting asymptomatic cases. Adds that a lot of people are not making it to the national statistics as they are testing positive at home. Well, let's begin with the day's market action. It was a day of extreme volatility on the Wall Street. Indices took on heavy losses in early trade, triggered by persistent fears of a global recession next year and a surprise move by the Japan's central bank. However, Nifty and Sensex staged a late pullback, helping them end with minor cuts. Sensex fell 104 points, while the Nifty fell only about 35 points. Reliance and IT stocks led from the front. Rupee, meanwhile, ended the day at 82.76 to the dollar, weaker than yesterday. In international news now, European Union members have agreed on a cap on natural gas prices to tame the energy crisis. After weeks of negotiations, EU members have agreed to trigger a cap if gas prices exceed €180 per megawatt hour for 3 days. This cap will come into effect on February 15th. Back home, the market regulator SEBI made some crucial announcement after its board meeting, the most important being on share buyback regulations. SEBI said that buyback via stock exchanges will be phased out in a gradual manner. Other decisions include the setting up of investor risk protection platform, amendment to stockbrokers regulation, and also a provision to return incomplete DRHP papers filed for an IPO. Let's go across to Yash Jain, who has been tracking the developments from the SEBI board meeting. Yash, tell us, what are the key takeaways?
Well, that's correct, Ashmit. The board meeting today from SEBI has thrown some very important amendments when it comes to the current buyback regulations. One big statement which came from the board today is that there is an intention to completely phase out buyback through stock exchange or open market route by April of 2025, and the preferred route for buyback would be through a tender mode. As far as time till April 2025 is concerned, regulations towards open market buyback have been made more stringent, just like increasing the utilization of the amount earmarked for buyback to 75% from the current 50%. But since a tender route for buyback is going to be the more preferred one for SEBI and for companies, relaxations have been given here. SEBI has allowed upward revision of the buyback price till 1 day prior to the record date of the buyback. Also, they've removed the requirement of filing a draft letter with SEBI for a buyback of this particular sort. There are more relaxations which market regulator SEBI is still in talks with the Ministry of Corporate Affairs. These would include increasing the maximum limit of buyback to 40% of the paid up capital and free reserves versus current 25%. Also allowing net debt-free companies to have 2 buybacks in a single financial year. Importantly, there were various concerns about IPOs getting delayed after DRHP documents being filed with SEBI going to more than 100 days. Here, market regulator SEBI said that SEBI can't be the reason for delay in such IPOs, and it's many merchant bankers who've been repeat offenders of not providing the right information to market regulator SEBI. From now on, SEBI will look at returning these IPO DRHP documents and disclosing it in that manner if important information is not given to market regulator SEBI in the form that they've asked for. Apart from that, on the question, of course, NSE MD CEO mentioned about the intent to increase trading hours. Market regulator SEBI here saying that SEBI has no intervention there. If exchanges want to increase the trading hours, they can do so. There is no sort of restriction from market regulator SEBI. Certain large brokers have been, will be identified as qualified stockbrokers. They will have to comply with enhanced, regulations if they are selected as qualified stockbrokers. Finally, the conditions for onboarding FPIs have also been relaxed from market regulators' end. And also, lastly, SEBI has said that corporate governance norms, which are applicable on all listed companies, now will be applicable on REITs and InvITs as well, irrespective of them coming from a company which is listed or not listed.
We feel that the tender route is the more equitable route to buyback, and that the other routes are vulnerable to favoritism, let me say. So we are therefore seeking to phase out the stock exchange route for buyback. In the interim, we propose that that minimum utilization of the earmarked amount should be increased from 50% to 75%, which means that if you announce a buyback, you must at least do 75% buyback. And also that there will be a separate window on the stock exchange. It cannot be nebulous, and it matches with just anybody. There is a separate window for buyback. For a client, when they want to raise capital, if for any reason the timing is missed, it is a very, very serious issue. And it is our desire that SEBI should never be the reason why the client misses timing. There is enough data that we have to show that there are some merchant bankers who are repeat offenders. Our objective is that, look, we fully own delays at our end, but the merchant bankers need to fully own delays at their end and inadequate papers that they submit. And simply to show the client that they have filed papers with SEBI will not work now.
Well, now the Bank of Japan shocked global financial markets by increasing the cap on 10-year yields from their current 25 basis points to 50 basis points. Now, Japan's central bank said that the adjustment will improve market functioning and help it to maintain accommodative financial conditions. Lata Venkatesh is joining us now. Lata, help us decode what this Bank of Japan announcement means, why is it so sudden, and what it is likely to translate into.
Basically, the Bank of Japan is going to allow the yield on the 10-year to rise from 0.25, where it was capping it, to 0.5%. Just for those who are not following Japan very closely, the Japanese central bank has had a policy of yield curve control, YCC as they called it. It was a way to keep yields low so that they could kickstart the economy. Now that is coming under a bit of a question because globally yields have gone up so much. That, as the BOJ says, is creating financial issues. And Japanese inflation has gone up to almost 2%, 1.99. Previously, it was in 2014 that it had seen such levels. After that, it has been, even negative numbers in terms of Japanese inflation. So there was a need. But it was a totally unexpected move. The current BOJ governor is going to retire or end its term in April, and any change was expected only then. So the market is totally not positioned for this change by the third largest economy. Now, why is it important? It's a sign that the last major central bank has also pivoted and become hawkish. It is believed, the market's perception is now this means that Japan will exit its loose policy. It was the only, the cross-asset funding by using yen was a very large trade because it was the only cheap currency. You could take cheap yen loans and then cross-fund other assets. That source now is kind of drying up. Japanese investors, a lot of Japanese money has been invested in US treasuries. As it is, the Fed is going to buy less and less. There's already a tightening there. One more set of people may stop buying. When Japanese investors, who are among the biggest globally, find that there is a little more money to be made in their own assets, they may flee or at least move a little bit out of other assets as well around the world. That explains why you saw risk assets everywhere falling. And then the last and the most important impact. Japan is the third largest economy. A rise in rates over there can reduce Japanese pace of growth as well, such as it is, however, slow that pace has been. So this is definitely only slightly less important than, you remember Powell's pivot in end November 2021? It's almost as important an event as that, according to market participants.
Well, back home, the Reserve Bank of India's monthly bulletin on the economy has highlighted that reduced input cost pressures and buoyant corporate sales can herald the upturn of India's capex cycle. However, it has warned that there should be no letdown of guard against inflation. Ritu Singh now joins us with more details. Ritu, take us through the takeaways from this RBI bulletin.
Well, first, a disclaimer, the papers in the bulletin reflect the views of the authors and not of RBI as an institution. But that said, these are written by prominent people, which include deputy governors of RBI, and are therefore regarded as important views. So let me start with what the paper says on the state of the economy. It says the near-term growth outlook for India is supported by domestic drivers and waning input cost pressures. Still buoyant corporate sales, turn-up in investments and fixed assets are all heralding the beginning of an upturn in the capex cycle, which it says will contribute to a speeding up of growth momentum for the economy. There's also a study on inflation, which is led by RBI Deputy Governor Michael Patra, which analyzes the CPI trajectory in India post-February and finds that inflation surging above the upper tolerance band of the MPC target was kick-started by a series of supply shocks. But what started as a shock to food and fuel prices got increasingly generalized over the coming months, and a swing in inflation from goods to contact-intensive sectors is generalizing inflation and making it persistent. That said, with CPI still hovering at high levels, there is no letting down of guard by the RBI. Finally, an important and interesting paper that provides some estimates on India's digital economy, which shows that the core digital economy accounted for 8.5% of GVA and the digitally dependent economy around 22% of GVA as of 2019. The digital economy, it finds, grew 2.4 times faster than the Indian economy, and employment estimates it finds showed that 4.9 million people were employed in the core digital sector and around 62.4 million people in the digitally disrupted sectors, again highlighting how important digital is becoming to the overall state of economy.
Right, Ritu, thanks a lot for that. Now, the government may be planning tax waivers for potential buyers of IDBI bank. Sources tell CNBC-TV18 that the Finance Ministry is looking to relax a clause that would require the buyer to pay additional tax if the share price rises after the final bid. Sapna Das filed this report earlier.
But if the this clarification comes through from the CBDT, it will be a source of relief and comfort for potential suitors for IDBI Bank. Basically, this request being made to the tax authorities emanates on two grounds. One, as a matter of principle, because in the past also for strategic disinvestments, similar such tax reliefs have been sought and they have been granted by the tax authorities. So as a matter of principle, this request has been reiterated. Second, of course, the presence of LIC and IDBI Bank. So far, such kind of discussion arrangements were between government to government. Here, LIC is not government. So basically, maybe clarity is also being sought because LIC is not a government entity, so to speak. So that's one. Second, what it means basically is the bid price that is accepted both by the government and LIC will be treated as the fair market value. So any upside that emanates post the transaction, any upside that emanates on the stock and any kind of additional tax outgo, that will be avoided. I think that's what is being sought. Clearly, and there are other parallel examples also. For example, in terms of the open offer, the pricing of open offer here again, SEBI has already granted an exemption. It has agreed to the fact that the bid price that comes in and is accepted by the government for strategic disinvestments, that should be treated as a benchmark for the open offer. So I think similar kind of arrangement is being made over here, and we are given to understand that there is quite a bit of interest for IDBI Bank stake sale.
In other news, auto industry body SIAM urged GST Council not to hike cess on MUVs, saying that regulatory costs and high taxes are already hurting entry-level cars and scooters. It added that the budget must focus on capital allocation measures and infrastructure investment to trigger growth of the automotive industry.
We have requested the government is that they should continue with the growth-oriented approach for this budget. The consequences will not be good. So I think we should not put any additional taxes.
In the electric vehicle space, the centre has suspended models of two EV makers from the FAME scheme after receiving complaints regarding misappropriation of subsidies. Now, the complaints are mainly related to violation of phase manufacturing program guidelines under phase 2 of FAME India scheme. These companies won't get their pending claims until they show compliance with the PMP guidelines. The Ministry of Heavy Industries has received complaints against 12 companies, including Hero Electric, Okinawa Autotech and Jitendra New EV. Nestle India boss Suresh Narayanan says that it would be a bit too early and perhaps not appropriate for inflation forecast for 2023, but expects it to be an easier year. He told my colleague Shilpa Ranipeta that prices of milk and wheat are still elevated, but he hoped that the worst of inflation is behind us.
I think the fact of the matter is I do hope that the worst is behind us in terms of inflation. And one is seeing that in some parts there is a bit of a softening. That is, at least at the moment, it's showing it. But some parts of it, like for example milks or wheat or a few other commodities, are in fact showing a very firm trend.
CNBC-TV18 News Break confirmed Dabur India promoters, the Burman family, have sold 1% stake worth over 1,000 crore rupees via a block deal. Dabur India says that the promoters have sold the stake to fund their private ventures. Hinduja Global Solutions Board has approved a 1,020 crore rupee tender buyback. The buyback is at a price of 1,700 rupees a share versus the current market price of 1,405 rupees a share. The Empowered Committee headed by Niti Aayog CEO has approved incentives for two companies under the PLI scheme for mobile phone manufacturing. The two companies to be receiving the incentives are Foxconn India and Paget Electronics. Paget is a 100% subsidiary of Dixon Technologies. Incentives worth 357 crore rupees have been approved for Foxconn India for incremental sales and investments between 1st of August 2021 to 31st of March 2022. Similarly, incentives worth 58 crore rupees have been approved for Paget Electronics for incremental sales and investment during Jan to March period of 2022. Dense fog continues to shroud North India, causing delays in flights and road accidents. Indian Met Department's Dr. Janay Mani tells CNBC-TV18 that the fog in some parts of northern India is expected to improve due to wind conditions.
Fog has been the peak actually. Cover is almost Punjab, all station, Air Force station, we have data also. Haryana and then New Delhi and then Uttar Pradesh. But Bihar and Jharkhand is okay. So this dense fog we are predicting for tomorrow morning and then will start improving. Some windy conditions are developing.
Well, with that, it's time now to slip into a very short break. But coming up on the other side, COVID cases surge in China with reports of hospitals being overwhelmed. We get you the latest details from Beijing on the other side. Welcome back. Now, Twitter has announced the rollout of Twitter Blue for Business aimed at differentiating between brands, key employees and others. A golden check mark along with a square company badge will appear on the company's profile, while those associated with the brand will get a blue check mark and small badge of the company. However, there is no clarity yet on how much Twitter Business subscription will cost. Former movie producer Harvey Weinstein has been found to be guilty of rape and sexual assault against a woman in a second sex crime trial. He now faces an additional 18 to 24 years in prison. Weinstein is already serving a 23-year sentence after being convicted of sex crimes in 2020 in his first trial. The U.S. House panel has concluded its investigation into last year's riots at the U.S. Capitol. The panel unanimously urged the Justice Department to charge former President Donald Trump for inciting an insurrection and conspiring to defraud the U.S. government. Trump defended himself, calling the charges a bid to hamper his 2024 presidential run. FTX co-founder Sam Bankman-Fried has been transferred back to Bahamas jail after a reported plan for him to waive his extradition to the U.S. stalled. Becky Quick gets us more.
FTX founder Sam Bankman-Fried was sent back to a Bahamas jail yesterday after a reported plan for him to waive his extradition to the United States stalled. He arrived to court in a blue suit and a white shirt and was visibly shaking. He spoke briefly to answer the judge's questions and was told by a court officer to stand up straight. His Bahamian defense attorney appeared to be at odds with his U.S. legal team. He told the court that he was shocked that Bankman-Fried was there in person and that he had not requested his presence at the hearing. Reports over the weekend said that he would consent to extradition, but in court, he demanded to see a copy of his federal indictment before agreeing to return to the United States. After the hearing closed, he reportedly told his lawyer to proceed with extradition hearings. Now, a source tells CNBC that Bankman-Fried is expected to make an appearance at another court hearing at 10 a.m. Eastern Time today, where he will forfeit his extradition right.
COVID cases surge in China with reports of hospitals being overwhelmed. Wall Street Journal's China bureau chief tells CNBC-TV18 that there are more COVID infections across China and that the government has stopped reporting asymptomatic cases. Added that a lot of people are not making it to the national statistics as they are being tested positive at home.
There's no question that there are definitely more infections across China than the country has ever seen. This is a very rapidly spreading variant of the virus. A colleague and I, we went to a crematorium on Friday last week, so about 5 days ago. And there we talked to people who worked at the crematorium. We talked to 3 or 4 different people there. And we talked to a woman whose mother had died that morning. And in at least 3 cases there, we had learned that these were COVID cases that had led to the death, or at least they had tested positive prior to passing away. So, China officially had not reported any deaths at that time. And up till today, they've only reported a total of 7. So, whether or not that number is real or not, there's no question that a lot of people are getting very sick right now across China. But this is also a milder variant. So not everyone is dying.
Well, the Health Ministry, meanwhile, has issued an advisory to increase genome sequencing for the detection of new COVID variants. But with that, it's a wrap on this edition of India Business Hour. Thank you so much for watching. News and updates continue right here on CNBC-TV18.